Hi everybody, Dave Aquino with Basecamp Trading. This is a free video for Thursday, May 5th. May 1st. Apologize. Looking at that 5, it's kind of misleading. We're already in May. All right, so looking at the markets today, I want to look at Microsoft. Had good earnings yesterday after the close. Market took advantage of it. We opened up about 6.5%. We pushed higher. We were up about 9% before the market started to sell off a little bit here. Now, the normal way that I play earnings, first of all, is just look at the relative strength. 8%, 9%, 10% on a stock as big as Microsoft. That's an enormous move to the upside. Okay, you can see the market was anticipating some bullishness anyway in the stock. It didn't sell off, moved higher with the market, and then here's the jump. You have to be careful about jumping right into this trade because we're already repriced much higher than where we were over the past month. Now, that doesn't mean that we can't move higher, but what you have to assume is that the gains are already in, and then if we're going to go higher, we have to have additional buyers to push up into this 440, 450 level. So the easiest thing to do is watch the price action today. You notice that we're not giving back too much and falling into the gap. That's sort of bullish. But in order to continue to be bullish, we have to get more buying tomorrow and a break above today's high. Okay? That's a reasonable entry point for a continuation move to the upside. Basically, after earnings, you always have to think of it as a repricing of the company based on that new information. But in order for us to follow through, we have to have more buyers willing to push it above today's high. Now, you could kind of scale that down and use that same philosophy on the hourly chart. The first hourly bar, that's the first set of trades. And then if you get more buying, you're going to get a higher high, a break above the first hourly bar's high, and then go ahead and enter a bullish trade, right? But you notice we didn't get that. We got inside bar and kind of another inside bar, and we're kind of drifting around. So it's not the most overall bullish price action, right? Remember, the NASDAQ was up almost 2%. So we're bullish in the stock, bullish in the market. If the market starts to sell off tomorrow, maybe because of earnings in Apple or Amazon, or a disappointment in non-farm payrolls, maybe the bullish trade in Microsoft may not be the best thing. I could even potentially see a break below yesterday's low and a pullback in a falling market back to this 200-day simple moving average at roughly around 415. Again, you just have to see, do the buyers step in or are the stockholders taking profit, right, and selling it off? So that's the best way to approach earnings. Don't just buy blindly just because they had a good earnings report and the market kicked them up 8.5%, 9%. Make the stock prove that it's going to go higher. And that would only be because we have additional buyers. Okay? Thanks a lot.